All right, everyone, welcome back to 2025 and welcome to our news trading session. And this is it. I think this is the first trading sessions for our news trading session in 2025, and let's get ready for it. I think this is going to be an exciting night, a lot to take in. Just let me know if the audio is coming through okay, everything is coming through okay. Yeah, just let me know. And let's do this. Okay, my name is Vera and Jero. Let's start our non-farm payroll sessions. We're going to be trading the employment numbers live here at Octa. Okay, just a quick disclaimer, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So just be very attentive when determining the volume of your transactions and consider all possible risk factors. All right, let's get this excited. Let's get this rolling on. Okay, as per usual, there's going to be bonuses for participants. I'm still waiting for the new code, but we'll try the previous year's code and see if it works. If it's not, then we might change it a little bit. And you should already have access to the private Telegram channel if you're registered through the website or you have attended the previous sessions. So yeah, if you're new, you didn't register through the website, you just stumble across this live session, or you watch this in the future and you want to have access to the Telegram channel, just make sure you contact Octa's customer service. They'll be able to help you out there. Okay, so this is a code again. I think we need a new code, but see if it works. Nonfarm 2024. If it doesn't work, try Nonfarm 2025. I'm awaiting confirmation, but I think that would be the new code. Right, so yeah, give it a go. This is the W deposit bonus, so make sure you use the code when depositing into your trading accounts. If you're wondering if none of these codes work, do contact Octa's customer service while I'm waiting for the new code, and hopefully we'll get a new code by next week for our inflation trade. But yeah, try it out. Okay, so a little bit about myself. My name is Vera Njero, and I've been a full-time trader with over 20 years of experience, professional trading coach and technical analyst since 2007 for a lot of multi-global FX brokers out there in the US, Australia, as well as Japan. My expertise is in the Shimoku Kinko Hyo technique. If you're wondering what this is, we have actually done several webinars on this. You can actually search it up on the YouTube channel. Make sure you type in Japanese charting techniques. I think that's basically what we name it in the channel there. Again, I've also been invited as a guest speaker at Trading Investing Expo across Australia, where I'm based, as West Fair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association. Okay. I used Nonfarm 2025 and it works. See, I told you it's not that hard to kind of figure it out because we move on from Nonfarm 2023, 24, 25. But yeah, this is actually our third year running this series. Let's keep it running for a little bit more. Okay. Do you want to talk a little bit about some theories first? For those that just join in, we will talk about some of the theories, but I want to cut it short a little bit because I do want to discuss a lot of stuff. I think there's a lot to take in the market and a lot of preparations to do for tonight. But yeah, I want to go through some of the theories first for you guys that are new here or just stumbled across or maybe need a little bit of a refresher. And why is this so important? I'll give you the context as well on what we are looking at here tonight. It is going to be a little bit different, right? Very, very different. Okay, so the guys that basically posted the data out, basically the Bureau of Labor Statistics. They are a U.S. federal agency that collects and disseminates various data on the U.S. Economy as well as the labor market. And its reports also includes the CPI number, which is what we're going to be looking at next Wednesday, which is the inflation number, as well as the PPI, which is kind of the producer price index. Okay, both of which considered important measures of inflation. And at the end of the day, we are talking about inflation here and how this labor data can actually impact inflation. I think there's a lot of concern about that as well right now at this point in time. I remember that the FOMC's dual mandate is to maintain price stability as well as the labor market. So both of these are basically what the FOMC is created for. So again, what we're doing every single month, the labor numbers, which is tonight, the employment numbers, which is tonight, and the inflation number, which is next week, these are the two main numbers that we are keeping an eye out for because that's basically what the FOMC is designed to maintain stability for, okay? So Within the labor market data, the most interesting aspects are obviously the number of people employed outside of agriculture, which is the non-farm payroll, which is what we're looking at today. On Wednesday, we had the ADP, NFP numbers. ADP are private non-farm payrolls. The NFP numbers that we have here is pretty much kind of the benchmark on what traders are looking at in terms of the US economy. Okay. The other thing is we're also going to be looking at the unemployment rate, very important as well, right? Any of these two combinations tonight is going to trigger a lot of movement in the market, and I think the market is already prepping up for that. So yeah, at the very beginning of the year, the agency publishes a calendar with the release date for the entire year. You can actually go to bls.gov, and you can actually find the schedule for the rest of the year. So there's no excuse saying, oh, I didn't know the NFP is actually going to be released today. Oh, I don't know when the NFP is actually going to be released. Schedule is given out a year, pretty much for the whole year. Okay. So unemployment data is also published every first Friday of the month. But if it falls on a holiday, for example, last week we had that New Year holiday. Well, it's technically not a holiday, but no one's back there looking at the market. So we didn't do the NFP last week. The NFP was published this week, right? Which is kind of the first. I believe this is actually the first full week of January. All right. So yeah, cases like that, publication usually postponed to the following week, occasionally to the Thursday of that week. But yeah, for this year, I think it falls on January and then March in terms of the second week instead of the first week, first Friday every month, right? Inflation data, CPI, PPI, typically published the following week. Typically look at the CPI on Wednesday, and then on Thursday we're going to be looking at the PPI numbers. But that's basically it. Okay. All right. So those are who publishes this. All right. The BLS. All right. So what is the non-farm payroll? Non-farm payroll report is a monthly report that's released by the U.S. Bureau of Labor Statistics that measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment, as well as non-profit organizations. Okay, so market analysts and investors usually look for NFP figures above 200,000 for a positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors as well as the context it is released in. And tonight we do want to talk about that context. I'm probably jumping up a little bit there, but last month we have 227,000 gains in the market. This week on the Outlook, I posted it out. It was 150,000 for the consensus. Tonight it has gone up to 160,000, all the way up to 200,000. So it will fall between that 160 to 200,000. That's basically what the market is expecting tonight. If it falls below consensus, if you're looking at a number 150 or even below 150, I think market is going to start pricing in for more rate cuts in 2025. And this is basically what market is anticipating. I think that's kind of the fuel to bring back risk into the market. So one of the couple scenarios here that we're looking at, typically this impacts the US dollar, right? So if the NFP number is high, it's good for the US economy. If a high NFP number means that the labor market is actually strong, it could actually push the US dollar. So this doesn't change. But what we're looking at tonight is not really the 200,000 number. We are actually looking at whether or not it actually falls below 150,000. If it falls below 150,000, a lot of gains, sorry, not a lot of gains, a lot of risk appetite is going to come back into the market. And what could drive the market tonight? So what the NFP could drive tonight is actually the crypto market. That's number one. I think there's a lot of risk aversion in the crypto market. If the number is low, it could actually boost the crypto market. That's number one. It could boost the euro. It could recover the pound USD. It could also recover the Aussie USD. And most importantly, the equity market right now is waiting for a bad number. A bad number is good for the equity market. The assumption behind that is if the number is actually low for this month, then every traders out there in the States are basically just going to start recalibrating for, adding one more rate cuts in 2025. That could change a lot of stuff because everyone is just anticipating for one rate cut in 2025. They thought the FOMC was hawkish. They're just basically looking for excuses for any weakness in the labor market to kind of say, all right, I think it's not strong enough. I think the FOMC should be cutting more rates, and that's basically what we should anticipate tonight, okay? All right, so NFP data is a very crucial indicator for the US labor market. It can significantly impact financial markets across the board. It will impact the bond market, it will impact the treasury market, it will impact the 10-year yield in the US, that will impact the US dollar, equity market, and for tonight, it will also impact the sentiment on a lot of other markets like commodities and crypto market, okay? So if it falls below that, may be viewed negatively, while one exit's expectation is viewed positively, and I already explained for you tonight what could be the impact if we have a positive NFP number. If the NFP number comes in above 200,000 tonight, it would send the US dollar up really pretty strongly and very quickly as well. So just be mindful of some of the potential scenarios here. Again, because of how important it is, FX traders basically look at the NFP numbers because we're expecting volatility in the US dollar, and you should be looking at currency pairs that is directly related to the US dollar, like the Euro USD dollar yen, Pound USD dollar Canadian dollar Swiss, New Zealand USD. Those are going to exhibit high volatility in response to the report's release. Okay. Okay, so yeah, again, very special time, but you need a very specific non-farm trading strategy, which is what we're going to be covering on tonight a little bit, okay? So I'm going to skip ahead here because I don't want to talk about some of the strategies here, but yeah, do note that why this is so important, because non-farm employee classifications account for approximately 80% of the US business sectors, contributing to the GDP numbers, so it does have a direct impact into how strong the US economy is for the year. So just keep that in mind. This is the reason why we look at the NFP numbers. All right, the second set of numbers that we're going to be looking at tonight is the unemployment rate. This is calculated in percentage and is published at the same time as the NFP numbers. And the unemployment rate represents a proportion of the labor force that is currently not employed but is capable of being employed. US unemployment rate is determined through a survey of approximately 60,000 households. And according to the BLS, it does need several criteria. Number one, those people that are in the survey, they must be without a job. Number two, they must actively look for a job in the past 4 weeks, and they must be available to start a job if offered one. If they were just unemployed for a week or 2 or 3, they're not going to be part of the survey. So technically, these numbers are basically derived from anyone that submitted their unemployment claims weekly, right? Anyone that surpassed 4 weeks, that's going to be included, could potentially be included in survey there. So again, for them to be able to start a job if offered one, obviously they have to be registered into the system, and that's basically how it is. And this is also the reason why we look at the weekly unemployment claims and how we could actually move the market as well, because we tally up the weekly unemployment claims to kind of give us a little bit of an estimate into what the NFP is for this month, okay? The data we're looking at tonight, it's actually not January's data, it's actually December's data. So just keep that in mind, okay? So if a person doesn't meet the criteria, they're not considered unemployed for the purpose of calculating the unemployment rate. I had several weird questions before, like, oh, are illegal immigrants in the US are going to be part of the survey? No, the answer to that is no, because they don't actually have the right to work in the first place. How are they going to be registered into the system? So just be clear. This number, it is pretty small in terms of survey sampling. It's only 60,000 households. You know, how many households we have in the States, right? Millions. So it is a very small samples, okay? So the third set is average hourly earnings. It's not going to be that important today, probably not now, but it will be important, I think, past March, yeah? Because average hourly earnings are basically how much people are getting paid per hour in the US economy. Are they going to be paying, are they getting paid more compared to the previous month and whatnot? This is basically what we're looking at, okay? So surveys are data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings as well. So, you know, if we're taking a look at holiday seasons in the US, I think a lot of people got paid overtime. That could skew the average hourly earnings up a little bit. So just keep that in mind. So I don't think this is actually going to be the main focus for tonight, but you still need to understand that there's actually 3 different set of data that's actually going to be released tonight. Okay? So when trading based on, I need to also say this. Why are we paying closer attention to this? Because it does provide us with an insight into the state of the US economy and its potential impact on the inflation, right? So when trading based on the US average hourly earnings, traders often scrutinize changes in wage growth compared to the previous months, as this can signal shift in labor market and potential inflationary pressures. And I keep saying inflationary pressures. Why? Because a higher than expected wage growth may indicate potential inflationary pressures. The logic here is this. If you get paid more, you're likely going to spend more. If you are earning more, you're likely going to buy more expensive stuff or a lot more stuff because you now have that buying power. And this in turn push inflation up. So if the wage continues to go up, this is what we call the cost push inflation. This is an issue that Japan is looking at in terms of whether or not the inflation is sustainable. They're looking for wages to go up. The UK is trying to bring wages up, wages down, because if wages continue to go up, it's very hard for inflation to go down. That's the logic behind this, and this is why this is actually important and directly related to inflation numbers. Okay, all right. Let's speed this up. So there are going to be some trading strategies here. I'm going to cover four actually tonight. We can do pre-NFP trading strategies. So these are basically strategies to trade the market's anticipation before the NFP data release. So people start opening up the positions from last week, from Monday, anticipating the NFP numbers to be positive, or is it going to be negative? People are starting to price that in. Okay, so a lot of the price movement there. So sometimes when the NFP number comes in as per consensus, it might not move the market because market wants the surprise. If there's no surprise, it doesn't move the market much. So just keep that in mind. Okay. And the reason for that is, some traders are already pricing in for that, and they traded before the NFP numbers. So this approach basically involves opening positions before the NFP release. It could be days before the NFP release. And once markets start pricing in, they actually get out before the NFP data is released to avoid the volatility, right? So if you're doing this, make sure you close your positions out before the actual NFP release to avoid extreme volatility that can actually follow through it. Now, the straddle strategy, for those that attended the theory sessions, we are using the buy stop and the sell stop order. This is basically what we're going to be doing for tonight. So it involves placing two pending orders, a buy stop and a sell stop, above and below the current market price just before the NFP is released. Again, we're looking for that corridor of volatility here. If we don't have a sideways market, if we don't have that corridor of volatility, we're not able to straddle the market. There are some key instruments out there tonight that we can actually straddle. So just keep that in mind, be prepared for the straddle to happen, right? So this way you can potentially profit from a strong price movement in either direction. If it breaks up, it'll hit your buy stop and continues to run up. You want to close the other order immediately, because if you don't, you're going to be impacted by further market fluctuations. This is what we call the whipsaw. It could actually trigger your buy stop and your sell stop order at the same time. And then you're going to be locked in with negative hedge, right? So just keep that in mind. We are going to be doing a straddle strategy tonight. If you, okay, what is this guy talking about? What is the buy stop order? What's the sell stop order? Watch the theory session. This is why we do that theory sessions. And, I know theory sounds boring, but you need to know this at least, right, a couple of times. Make sure you understand what you're doing before we do the straddle strategy, because we're going to be positioning our trades very quickly. We got about 5 minutes to do that, okay? And then after that, we'll come back to this. We might fade the initial move. So what we want to look for the fade is, once data is released, we want to observe the initial market reaction. Once initial volatility subsides, we want to look for opportunities to trade against the initial move, because the idea behind this is that market often reacts to NFP data, and that a retracement or reversal back to where the range is before the breakout could actually happen. So this could be an opportunity for us to actually fade the move back to where before the breakout, okay? Ideally, I do not want to see a fade, because the best case scenario for us is it breaks, it runs, and forget about it, right? Because if we start anticipating fade to happen, that means the initial trade that we execute, we need to get out of it very quickly. Otherwise, that could be a fade. Market could actually revert back. You would actually lose your gain. So ideally, we don't want to see the fade. So the fade is probably the worst case scenario, like in a situation where, okay, we got to figure out what that initial reaction is. If there's a lot of mixed data, then yeah, we will do the fade. But if the data is not mixed, okay, if the NFP number is good, the unemployment rate remains low, that's going to be good for the US dollar. If the NFP number is low and the unemployment rate goes up, that would actually be bad for the US dollar, but it will bring risk appetite back into the market. This is pretty much straightforward. However, if we get a number where we have good NFP, but at the same time the unemployment rate goes up as well, this is actually a mixed data. So this is what we're looking at. All right, post NFP trading, obviously, instead of trading during the release, you can wait for the market to digest the NFP data and then look for trading opportunities in the hours or days following the release. Our strategy allows you to Avoid heightened volatility during the release. You might avoid, huge spread, huge slippage, right? Or this is probably not gonna get filled at where you want during the releases, depending on how liquidity is drying up during release and how strong the volatility is. But yeah, on longer term trends also might emerge once the NFP data is digested by a lot of traders. So just keep that in mind. All right, regardless of the strategy you choose, keep the following tips in mind. Manage your risk. Always use appropriate stop loss orders. Never risk more than a small percentage of your trading capital on a single trade. Stay informed. Keep track of economic news, forecasts, market sentiments leading up to the NFP release to make better informed trading decisions. And this is why you should be paying attention to the weekly outlook that we push out every single week. All right, be flexible. Always come into the NFP numbers, even though I have a position, or I have to come in with an open mind. If I have to close out my position and reverse the position, I would actually have to do that. So be prepared to adapt your strategy based on the actual NFP data and the market's reaction to it and how it could actually impact the whole thing. All right, so these are the numbers that we're anticipating tonight. I think there was already a question by someone. Is the number going to be good? Is it going to be bad? We'll take a look at this. Previous number, 227,000. If we get 160,000, yeah, I think that's okay. I think we see a little bit of a reduction. We might see a resentiment coming into the market. But take a look at the consensus and the forecast. It's huge, 160,000 to 200,000. So it could actually fall anywhere between 160 and 200,000. And this is basically something that we need to watch out for. Okay, so judging by the consensus and the forecast here, the two scenarios we would anticipate that could actually move the market in one direction, it would be if the NFP number comes in below 160,000, that will actually weaken the US dollar. It will bring risk sentiments into the market. Euro USD, Pound USD would gain. Dollar Swiss would go down. Dollar yen might go down. We might see crypto market, rallying up again because they say, oh, you know what, risk sentiment is back. So how's crypto playing into this? It's not really the data itself, but it's really more whether or not risk appetite is actually going to come back into the market. That could actually push the crypto market up. Okay, gold prices as well, depending on this one here, because if the Fed lowers the interest rate, it would be cheaper to hold physical gold contracts or whatever. That could push gold prices up as well. Unemployment rate for tonight expected to fall between 4.2 to 4.3%. So yeah, it might actually stay stable at 4.2%, but if it continues to push up to 4.3%, that's not going to bode well for the unemployment state in the US. I don't think it's actually going to be a huge number here. I think if we want to see how weak the US economy is, it will need to push beyond 4.5%, but we'll see what happens here. Right now, the consensus is for it to remain stable at 4.2%. Average hourly earnings per month is expected to drop down to 0.3%. Average hourly earnings for the year remains flat at 4%. All right, so yeah, we do the trade on NFP, yes, and we are going to be positioning our trades now. We got a couple of positions that we have here. On the Pound USD, we are not able to identify that corridor volatility on 15-minute time frame. So we need to go up a little bit, just on the hourly time frame, just push it up a little bit. Market is pausing for a bit now. We got 6 minutes to go. So Pound USD, let's do our first buy stop. First buy stop for Pound USD is going to be at 1.23. 1.2340, I think that, no, 40 is too far. 1.2335, that's basically where our buy stop is going to be. And for the sell stop, you can have it close to, let me just see if it works here. 1.2258, I don't like 1.2258. I want to go 1.2250. I think that makes it, I think that gives out a little bit more room. Again, this is the range that we were anticipating. If you can take a look at this one here, this is the corridor of volatility. We have that, so we can actually apply this on the Pound USD. The Euro USD as well, you got a couple of, you might actually get 4, all right? We are going to be doing a special one tonight. We're going to be doing 4 stop orders. First buy stop order is going to be at 1.0325, no, 1.0330. And then one closer to it is going to be, no, I'll just place a sell stop here. This is the bigger range one, right? The sell stop is going to be at 1.0280. No, we want to go 1.0275. So 1.0275 for a sell stop on the Euro USD and a buy stop at 1.0330. And then we have a smaller one. So we are going to be doing double trades on the Euro USD. We want to go for a buy stop 1.0315. All right, and then the sell stop, the small sell stop, is going to be below this range here and that's going to be 1.02, about 1.0295. Okay, 1.02, 1.0295. Yeah, about there. 1.0295. So we got 4 stop orders. 1.0330 for the first buy stop, 1.0315 for the second buy stop, second sell stop 1.0295, and then 1.02, I believe we are looking at 1.0275. Okay, so huge gap there. We got 2 buy stop, 2 sell stops on the pound USD, on the euro USD. Dollar yen, I would kind of stay clear from the dollar yen. The range is too big for us to do a buy stop. If we do the buy stop here, that would be on this range here. That's about 150 pips. I'll skip dollar yen for tonight. Aussie USD, you can do a little bit of a small buy stop here, 1.06. So 0.6192. And then for a sell stop, this one here is a small range, so we got to be really careful with this one here because this is only about 10-20 pips. Easy to get whipsawed, but just in case you want to have one at 61.80 and then 61.95 on the Aussie USD. New Zealand USD, we're not doing anything on the New Zealand USD. For gold, you might be able to do gold here, but technically we don't really have that corridor of volatility. You can see how gold prices has been skewing up recently, and we really don't have that corridor of volatility. So stepping away from gold here, US 30, this one is actually primed for a breakout, potential breakout to the upside. Let me just bring this up, trade level, so you can actually see what we're doing at here. Again, this one here at 42,700 level for a buy stop, and for the sell stop, you got a couple of sell stops. One of the bigger sell stops that we have here is way down there, about 42,348. That's really too far, right? But if you go into the 15-minute time frame, the buy stop remains the same. For the sell stop on this one here, you want to have it at about 42,400, about 42,500. Yeah, 42,500 for the sell stop on the US 30. So these are going to be primed for breakouts. We've got 2 minutes. What else are we looking at? Bitcoin on 50 minutes time frame. This is prime for a breakout. You want to have your sell stop 94,500. That would be the sell stop on Bitcoin here. And for your buy stop, it's going to be about 95,350. All right, that's going to be the range on the Bitcoin. So Bitcoin, I think for once, I think this is actually going to be the first time that I look at Bitcoin and I say, hey, you know what, we could straddle the Bitcoin here. So there's a potential opportunity here for Bitcoin as well. So a lot of trades tonight. We got Aussie USD, Bitcoin, Euro USD. We got 4 on Euro USD. We got 2 on Pound USD. We got 2 on Aussie USD. We got 3 on US 30 because we got 2 floors on the US 30 and 1 resistance to watch out for on the US 30. So yeah, again, we're anticipating that reaction in terms of risk sentiment, whether or not it's actually going to come back into the market. Okay, and we did share the update on gold. We also have gold, and we're not going to be doing gold because it's not really a straddle. We're not able to straddle gold. All right, so data is going to be released anytime here. So yeah, let's see what the number is. Okay, and be excited. We're going to be quick. Any of the orders that's actually open, we need to close the counter order. So if a buy stop is triggered, we need to close the sell stops. Just keep an eye out on a lot of this stuff here. All right, any moment now, data is going to be released. Okay, we're going to be looking at the NFP numbers, whether or not it's actually going to fall inside the consensus and forecast here between 160 to 200,000. We'll see what's happening. Unemployment rate is going to be stable at 4.2%. All right, okay, any moment now. Waiting. All right. Why are we a bit late on the numbers here? Okay, that's very interesting. Waiting. Okay, I think it's starting to move here. All right, what do we have? All right, so we got buy stop should be triggered on the sell stop should be triggered on the Pound USD here. So yeah, Euro USD, Aussie USD, Pound USD, Euro USD. We got two. So yeah, Aussie USD buy stop. We're gonna close that. Euro USD buy stop. We're gonna close that. Euro USD buy stop. Euro USD buy stop. Pound USD. Bitcoin US30 all done. Bitcoin daily it's closed. So yeah. What's the actual number that we have here? The non-farm payroll is 256,000, really strong unemployment rate, 4.1%. This is going to be a huge boost for the US dollar. This is a huge number there. I think we are looking at a little bit of slippage going on to the market there. But so we will see what happens here. US30 is kind of slow on the reaction here on the uptick. It is pretty stable at this point in time, but everything else, the pound USD and the Euro USD, I think we are up and running on this one here, so we'll see what happens. It is a very strong number, 256,000, way stronger. No revision to the previous number. Unemployment rate is also improving, so we are looking at a very strong labor market here at this point in time. Okay, so we'll see what happens here. Huge gap to the downside on the US30. Huge gap. So we are losing a lot of risk appetite into the market here. We're very close to a lot of support level here. I think we got filled in too low on the US30, and this is the reason why we get in pretty much there. Our orders was up here. I think we got a little bit of a slippage on the US30. So this one here got filled a little bit too low. There might be a little bit of a fade going into the market here, but yeah, this is the initial market reaction. We'll keep the US30 at this point in time. This is, I think we got filled in a little bit too far down. Pound USD is all right. Euro USD is all right. I think two orders was triggered. Again, this was open a little bit to the downside here, but it is what it is. We're looking at market reactions going into the market here. It's so strong, yes. The NFP numbers and the unemployment rate, it's so strong at this point in time. All right, the pound USD, right now there's a lot of pressure on the pound USD. I think we're losing that pressure here. Next up for support is going to be at 1.22. So keep an eye out on 1.22 for pound USD. I think we are about 1.22. We break 1.22 here. We're going to be looking at 1.21. So just keep an eye out on that one there. So yeah, I don't know what's going on here. Is there going to be a potential for us to fade this? The dollar yen is actually, remember with the dollar yen, I think the area where we were anticipating for this week here is about 159. Whether or not we're actually going to be looking at profit taking happening about 159, that's actually going to be interesting here. Other than that, we're not really looking at a huge driver in the market here. I think the market is already exhausted. I think market is already pricing it for an anticipation that there might be a stronger US dollar here, but this is what it is. The pound USD and the Euro USD is dropping down like a stone here. I think it's a good time for you if you got in at a good price. If you want to move your stop loss to break even or whatnot. But yeah, I think for this one here, we got filled a little bit too low, not at the best optimum price. But if you got your buy stop and sell stop, you filled in at a good price, then yeah, I think this is good. Because if we measure how and where we got filled on this, you should be looking at about 50 pips already to the downside. This is actually not that strong of a reaction, except for the Aussie USD. This one here is amazing stuff. But yeah, everything else, I think the stock market is probably in a shock right now. Bitcoin is already falling as well. So this falls into the category where we anticipate if the higher numbers are going to be good, it would be a strong reaction in the market. This is basically what we get here. So yeah, a couple of combinations on what we have here, even with how bad the position got slipped. I think this is an okay trade. All right. Ideally, if you don't monitor a lot of these trades, move your stop loss to break even, let it run. But you should be thinking about when to get out as well. The pound USD, again, we're anticipating 1.22 to kind of hold out a little bit. If it does hold at 1.22, we might see a little bit of a bounce here. Euro USD, this is it. This is, oh my God, look at that. It's, that's nearly a cent down on the Euro USD. That's 100 pips to the downside on the Euro USD. This is nuts. Dollar yen, again, we're anticipating 159 to 160. That we might see a little bit of profit taking between those range at 159, but we're not trading the dollar yen here. Aussie USD being pressured lower. We are going to be looking at 61 cents on the Aussie USD here. Gold prices getting pushed down, not really too strong to the downside. It's not losing a lot. I think gold reaction here is it's all right. Nasdaq. It's not doing that badly. In all honesty, I don't think it was actually doing that badly. The US 30, though, the gap to the downside, oh my God, if you take a look at that gap there. We are very close to the low earlier this year. This is not the extreme low because the extreme low would actually come in around this levels here. This is basically where we got filled in. So we are, we could actually close out the US 30 here. I'm actually going to reverse the US 30. We're going to go for a buy on the US 30. We're going to have our stop loss here below 42,000. Right? I want to give it a little bit more room because I want to transition this into more of a longer term trade. So this is not going to be for short-term trades. We're going to be looking at about 300 points on a stop loss on US 30. Target-wise for the US 30 here, we're going to be looking at a little bit of a recovery back to about 42,700. Why are we buying this? We're looking at this low here on December. We're looking at the last week's low on the US 30. I think we might actually find this level here to be a level we might see a little bit of a strong support building up here. Pound USD very close to 1.22, so I'm happy with the result. I think we got about 170 pips on this, all trades there. And let's just close out everything and be happy with it. All right. And boom, boom, boom. And we are done. That's a lot. That's a lot to take in. So yeah, I'm reversing the US 30. I like the, I'm looking at this and we're looking at a potential base here on the US 30 here. Now let's take a look at the pound USD. Are we going to be looking at any bases here? USD, no bases. Aussie USD, this one is a goner. This is gone. I don't think we are going to be recovering anywhere on this one here. New Zealand USD is also gone. It's a good time to take your profits right now. Initial volatility, remember, again, market could overreact to that. We could actually potentially fade this. I'm just looking for a level to fade this. Gold, not touching gold at this point in time. We do have a little bit of a floor building up for gold here around that level there. If you're thinking of going long gold, you can go long right now. Just make sure your stop losses are going to be at 2,660 and your profit target, it's really what we're looking at here. We might see a little bit of a stronger push to the upside if it bounces off this level here. You might actually potentially go at about 2,690 there for gold if you want to, but just keep that in mind. Your stop loss is going to be at about 2,660. I'm okay with this one here. I think this is pretty stable for gold at this point in time. Nasdaq, I'm anticipating about a potential recovery above 21,000. So what we're looking at here on Nasdaq here, let's just bring out my trading view here so I can show you what's really going on, what we're anticipating here. This is the US 30 and we're looking at daily support 3 happening here. Again, we're really focusing on the low on the US 30 here from earlier basically a month ago. We're looking at this level currently holding up. This is the weekly support one. We might actually find a little bit of support here. Nasdaq, if you take a look at this one here, pretty much about the same scenario here. We might actually be able to recover a little bit on the equity market. We're not creating a new low at this point in time. So we're still being well supported by a little bit of a higher low here on the USD, the Nasdaq here. Nasdaq is about 21,000 here. Again, what we're looking at for on Nasdaq is basically I want to look at a recovery back up of 21,000. So yeah, let me just take a look at this one here. Let me just highlight 21,000. This could actually be a good trade for a recovery trade on this one here. Any push back up above 21,000, we will want to execute a long order on this one here because then our stop loss is not going to be too far. It will be about like that in terms of stop losses, and we're going to be recovering whatever range today. So about 21,200, about 1.5 in terms of risk reward ratio. I think it does make a lot more sense. Yeah. But yeah. What's the stop loss for US 30? We're going to be looking at 42,000 and we're buying now on the US 30. Let me just check that. Is that triggered? Is that not triggered? Oh, sorry. Yeah, it wasn't filled just now. But yeah, US 30 here, stop loss is going to be about 118 points. No, a little bit lower. I want to turn this into more of a longer term trade, right? So we're going to be looking at support about 42,000, just slightly below 43,000. The reason is if it drops below 42,000, it's pretty much hopeless on the US 30. Right? Target wise on the US 30, if you take a look at the hourly time frame, it's good enough if it can recover back to 42,700. Risk reward ratio is slightly above 1-to-1, but once if it does recover and we are gaining here, we could actually move our stop loss to kind of break even and let it run a little bit. But we'll see what happens here. I think market is overreacting a little bit. I know the number is really strong. But here's a catch. The number is strong, but do keep in mind the market has already reduced the potential rate cut for 2025 to just one rate cut. They're not anticipating any rate cut to happen in the first half of 2025. So, in all honesty, if I look at this number, is it strong? But is the labor market going to impact how the FOMC is going to be thinking? No. Why? Because the FOMC members this week has already been telling everyone out there the labor market is strong. We don't really quite care about the labor market. We are maintaining a potential, we're being a little bit more cautious on cutting rates too aggressively. Why? Because we have a loose cannon in the US, which is Donald Trump. So that's basically what they're afraid of. It's not really the labor market. So the number could be good, right? Initial shock in the market, but does that have a lingering effect? I don't think so, because market has already reduced that price in for 2 rate cuts in 2025 to just one. So I don't think there's actually a lot to kind of push, because the market for the past 3 weeks or so has been reducing their expectations. So we'll see what happens here. We're buying now on US 30. Yes, we're buying now. We're already gaining here on the US 30 here. We already gained 500 points on the US 30 here. So yeah, you want to move your stop loss to break even on this one. Yeah, I think it's a little bit too early, but I want to turn this into a little bit of a swing trade on the US 30. Everything else, I think we bounce off 1.22 on the pound USD. Euro USD, we also bounce off 1.02. Not even 159, but it's not achieving that level. This one here is a lost cause on the Aussie USD. I'm not going to fade the Aussie USD. I'm not going to fade the New Zealand USD. I think this two is pretty much long gone. Gold, it's pushing up higher here for gold right now. So I think we had that strong bounce on gold. Again, I wasn't really feel at a very good price level. Bitcoin, not too keen on Bitcoin. But overall, if you take a look at what's happening on Bitcoin here, that sharp pull off, I think this correction is about 61.8%. On the intraday push, yeah, about 61.8%. It just touch the level, bounces it off. This is on the daily. I'm sorry. This is on the daily. I think this is a huge crash on Bitcoin here. Sorry, Bitcoin daily. On the early time frame, we did retrace 61.8%. You might be able to fade this. It's just that I don't know where the stop loss is on this one here, because it just hits that 61.8%. Let's take a look at dollar Canadian, dollar Swiss. Not really interesting. Dollar Swiss, not able to trade dollar Swiss. Oil prices, not really. We're not able to do that. Nvidia market is not open yet, so just be mindful. Euro yen, sterling yen, everything else yen related, we're staying away from that one there. But yeah, pound USD, we could fade it, but I don't really have a strong, I don't have that strong connection that the sterling and the euro could actually fight against the US dollar. I think we have a different case for the equity market. And the reason why we're buying on the equity market is because if we take a look at the euphoria, the shock that happened, there was an initial shock that happened in the equity market. And the reason why we're still buying the equity market is overall, this is a very strong numbers for the US economy. So overall, this puts the US economy onto a greater position. And here is the thing, right? If you guys didn't know what happened this week, there was a little bit of a fallout in the equity markets, right? Just giving you guys a little bit of an insight into what we are thinking in the market, that Trump wanted to potentially pull or call on an economic emergency so that they can slap on more tariff. And I don't think with this kind of data that Trump could go on to anyone in the world and say, hey, the US economy is not doing great, we want to put on more tariff. I don't think he's actually able to do that. So that, in one sense, could bring stability back into the market. So that could bring stability back into the market. And overall, if we take a look at the stock market, the US economy is overall doing great. So again, this might provide a little bit of support, but from a technical perspective, we're keeping an eye out on 42,000. As long as 42,000 doesn't break, we're going to be good, right? The pound USD, we can fade this, but I just don't see where are we going to fade this? We're not looking at any strong movement on the pound USD. Take a look at the recovery on the 5-minute time frame. It's really, we're not looking at the volume there, right? Like Euro USD here, I think this is probably going to be stronger versus the pound USD if we take a look at it on a 1-minute time frame. Gold here, I think we did have a much stronger bounce, and I think this is already recovering up to the upside. Nasdaq here, again, if you take a look at the recovery on the 1-minute time frame, not as strong as potentially this one here. This one here, it gaps down significantly. It has to fill the gap, and this is the reason why we're chasing after that fade there. We need to fill in that gap, because if I start going onto the 5-minute time frame, 50-minute time frame, this is just a huge shock in the market. We're not going to be able to escape the gap here unless we go onto the hourly time frame. So this is something that we are going to be utilizing. I think the fade is already working well at this point in time. We just need to maintain what we're looking at here. What's the market pricing in? So the Fed says, I don't need to check for unemployment for a while and just focus on the PCE. Fed could do that. Fed could then monitor how the impact on tariff is going to be. I was talking about, I haven't discussed this on the English channel here that we have here, and we haven't discussed it on the Outlook. There's actually a concern here this year that could actually be a potential market crash. And one of the key drivers is every time a tariff is actually imposed in the US, the last one that was imposed was actually the steel tariff. This was actually 2001, I think 2001. It was imposed by Bush. It causes a crash in the stock market, and one of the trigger that we would call it more of the dot-com bubble burst there. But one of the key triggers for the Great Depression was actually a tariff that was actually imposed in 1928. The Great Depression doesn't happen until 1929, end of 1929. So tariff being placed into the market, it does cause a lot of concern into how it could actually slow down the US economy. So just be mindful of that. And this is the reason why we're actually anticipating a potential crash in 2025, but I still need to do a lot more research on that. But just let you know. Okay. So let's see what you guys are looking at here. How much gold to retrace down? I think we're pretty stable on gold at this one time. This is already stable as it is. Can you go down? Take a look at the 50-minute time frame. Look at that wick there. It was such a huge wick. It might come back down a little bit. I think the next step this might actually come to test is probably around this area here. Let me just get that for you. Just about that area there, about 2,670. Anticipate that level. If it holds as a support, I think we can buy in again on gold. If we have a swing position short on pound and euro, which one should I be targeting? I think I should be targeting parity on euro, much more so than pound. I think pound has been pressured by how the bond market has been crashing in the UK, right? The gilts is not doing that well, and that's basically putting that pressure on pound USD. All right, with this data make market thinks that there's no cut in this year? No. I think market is still pricing for a one cut. I think it's just that we're not anticipating that first cut to happen maybe about until June. But again, a lot of things can happen, right? We might be looking at May, June, see if the condition worsens. But yeah, tariff imposed, I don't think we're going to be looking at an initial reaction to anything like that. But yeah, so far, so good. Okay. All right, so that's that. Any other things that we want to look at? Anything else to monitor? Let's go to TV and see what's going on here. I'll take a look at the positioning on the pound USD here. It is a very sharp drop here. I think that this could go down a lot more. I think we're still going to be looking at the support at 1.22. Obviously, this has shifted a little bit, but if we take a look at it on the daily time frame, the pound USD, yeah. See what happens here. That's exactly where the support tool on the weekly time frame is located. Weekly pivot is located. So the support tool on the daily there, it should provide a little bit of a temporary support. If today doesn't break below 1.22, it's really hard for us to continue. But if it does break 1.22, opens up to 1.21, potentially 1.2050 for the rest of this week. We only have about one more day to go. So, I'm not taking any chances on that one there. All right, and also, just for your information, the U.S. market is not open yet. U.S. market is going to be open in about 40 minutes time. So I think we might see a lot more movement for the Dow, the Nasdaq when the U.S. market open and everyone digests all these numbers here. But we'll see what happens. I think judging on the futures market, I think market is already jittery enough. Dollar yen is facing 150 and 160. Yeah. So, Bank of Japan checking on that? Really? Just check. I'm not sure, not getting that news there. But yeah, dollar yen. Look, I'll be honest with you, dollar yen, the grind there, right? If it's such a huge shocker into the market, it should actually be above 159. We are approaching that. Is it going to grind through that? I think we are going to grind through that. I'm not buying the dot yen again. If the Bank of Japan decided to take a look at this and say, oh, crap, I need to kind of intervene a little bit. I don't think the Bank of Japan is going to intervene. The data is too good for them to intervene. It'll be a waste of their money if they do that. But yeah, it is a concern. All right, so we'll see what happens here. Initial reaction in the market right now for now is controlled. It's stable. We'll see what it is. But again, one of the thoughts that runs through my head right now, if I take a look at this number here, the FOMC could look at this and say, we already told you the labor market is strong, right? And since we already sound a little bit more on the hawkish side, is the market going to price in for no cuts in 2025? Let me check the CME Fed Watch tool here. Are we going to be looking at that? Hopefully not, but we'll see. Because it'll be so negative for the market if they do that. Current rate target is 4.25, 4.5 target rates for now. So yeah, let's take a look for March. About 72% no cut, 27% for a cut in March. For May, still pricing in 33.9% cut. Some even expecting a 4.7% potential for a 50 basis points cut by May. For June, yeah, market is about 50-50 on that cut. So I think market is still pricing in for that one more cut this year in 2025. Okay. So, getting a little bit quiet here. Again, the US 30 is not a short-term trade. This is pretty much, we are going to be looking at this more of a swing trade here. I know the limit here is that it is at about 42,200 level here, but the stop loss here is at about below 42,000 because the price goes to 42,000. Might be a little bit of a lost cost for the US 30 in the short term. So just keep that in mind. This is a little bit more of a swing trade happening here. Much wider stop loss here. I think we're going to be looking at a little bit of about couple hundred points on stop losses here. We're looking at stop loss about 300 points, yeah, on the US 30. But yeah, it is what it is. We're going to leave that there. For gold, this here is a little bit slow. Are we going to keep this? I think we're going to keep this. We might be able to move the stop loss a little bit higher here, a little bit earlier, but we'll see what happens. I really want to see the reaction around 2,670 level. 2670, this is the level to watch out for. If it holds tonight, 2670, then all is good for gold. But if it drops below 2670, you may need to be a little bit more cautious. I think I would minimize the stop loss here a little bit. I'm going to go with that low today, right? What's the low for today? Yeah, about there. I'm going to move my stop loss to about 2662. But initial reaction on the hourly time frame, if it does close like that, we have a huge wick to the downside. That could be a really good indication that the sentiment in the market's kind of shifted up a little bit here. All right, everything else is pretty much stable. I'm not looking at any recovery on the pound USD significantly at this point in time. It does move away from 1.22. Not good enough for me to kind of fade that. Pound, euro is probably going to be a stronger fade, but I'm not taking the fade that we have on the euro. Dollar yen, not even able to reach 159. Aussie USD, New Zealand USD, I'm not going to be fading that. So the only two I'm fading tonight is actually gold and the US 30. Bitcoin, not fading this. If you guys want to go for Bitcoin, you can do this. If the hourly time frame close and price is back up above 93,500, you can go long on the Bitcoin here. Just make sure your stop losses are going to be below this low here. And nothing more, right? So we'll see what happens here on Bitcoin. I'm not into Bitcoin for intraday trades. I think we got our Bitcoin. Want to get out from Bitcoin. I'm happy with that. I don't really think I want to fade that. Dollar Canadian, I'm not fading dollar Canadian. You can see how market is looking at this and say, oh, it's really not a big deal. I don't think this is actually a huge surprise. But that's one train of thoughts that we need to take a look at. Also, this is what makes the NFP trades unique, because you need to understand the context. If you don't understand the context, it's really hard. It's not really black or white. It's not really, all right, is it good or is it bad? It doesn't work that way. We need to understand the context on when the data is actually released, what the market has already been pricing in. But yeah, everything else, it is what it is. All right. All right, gold's running. The US 30 is running. You can move your stop loss to break even if you want to. I think the US 30 is already up by, we got 350 About, a couple of good points there on the US 30. What are we looking at here on the US 30 here? Let's take a look, take a look, take a look. Yeah, not much. Just about 30 points at this point in time. But gold, I think this is holding on strong for gold. Depending on your lot size, obviously. But gold, yeah, I'm happy with gold. Yeah, in a short while, once the other time frame closes, I think you can move your stop loss to break even and let gold run. So yeah, in 4 minutes time, you can do that. I don't think it's a huge deal at all. All right. Okay, so let's continue on to the slides here. And so basically, we talk about this. We got strategies based on pending orders, right? You can trade before data is released, trade after data is released. We just trade something after the data is released, right? Again, this is the code Nonfarm 2024. Someone said to me, it's Nonfarm 2025 right now. So give that a go. If 2024 still works, use the 2024 first, right? And then use the 25 for sometimes in the future. This year, just skip it. Okay. All right. So what's next on Q&A session, last minute questions, if we have anything like that. If not, then the next one here is that we're going to be doing our live CPI trade. Live CPI trade is going to be on the 15th of January, same time, same place. That's going to be next Wednesday. Okay? All good. We did a great trade for 2025, for the beginning of 2025. A lot of trades, a lot of hectic trades here. All good. All right, managed to get out really quickly on that. The slippage was kind of bad, but we still turned things on around. We could have gained a lot more if we didn't get filled in that low there. But hey, all things great, all things good. We're doing great. All right. All right then, if that's the case, let's wrap it up for tonight's session. We're 3 minutes early, but that's pretty much it. We got our position set. I don't think there's a lot of concern here. Hopefully you guys managed to get something out of it for tonight. It is a huge surprise in the market there. The number was so strong. It's crazy. All right, with that, let's wrap it up for the first live trading session in 2025. Good luck with your trades. Have a fantastic weekend ahead. I'll see you next week on Wednesday. Stay safe.